What is the YouTube channel called again?
Should be the Texas Real Estate Radio Network, right? No? We got two channels?
We have live, and then we have the Texas Real Estate Mastermind channel.
Let me pull it up.
All right, folks. So for those of y'all who are listening, a little inside baseball here. We are doing, I don't want to call it a complete rebrand, but that's really what we're doing. Ooh, music.
Video on the actual.
Oh.
Oh, nice.
I like it. So this
Uh-oh. Ooh, I like it. The daily.
Texas Real Estate Radio Network Daily.
I like it.
Okay, got it. Great.
Ooh, I like this intro. This sounds good.
out of there. I'm excited to get my timer going. Whenever you're ready.
Yeah.
Welcome to the show. Jason Bible, Robert Orfino, and special guest,
Yes, Dakota Dog.
Dakota Dog is here. We'll put a bed for him in the corner somewhere. Because once that puppy energy gets out, he'll probably just wander in here and go to sleep.
Yeah, we're working on that this morning.
So I'm going to go ahead and predict we're going to see some turbulence in the bond market. I am watching some things that I think are finally coming to fruition. Well, let me put it this way. If the bond market doesn't collapse, the stock market will. The equity markets will. So we're going to something's got to give here. Something's got to give. Now, why do I mention that? I'd be really careful if you are in, well, up to you. I'm not an expert. I'm not an accountant. I'm not a CPA. I'm not a whatever.
Yeah.
But the fixed income stuff is going to get kind of turbulent here. In part because inflation.
Yep.
I'm being sent out somebody had sent me some deals on some notes, and it's like, 20% return here, 30% here, 40% here. And I'm like, that's going to get cut in half in the next 9 months just because inflation. So I'm like, that's not what those real rates of return are. So just be careful out there, guys. The most important thing you can do for your financial future right now is participate in as much of the upside as you can in the equity of deals.
Yes.
If it's short-term notes, that's fine. But any of this long-term stuff, the fixed income assets, the annuities, all that, it's going to get real bumpy here.
So once a month, I do a webinar called 4 Ways to Make Money Passively in Real Estate.
Okay.
Right? And one of the things I explained was, you're never really given an apples-to-apples comparison on real estate deals.
Right.
And we have a guy, and I didn't say his name, but a guy who said, hey, I'm not going to go on that syndication because this guy over here said I can make 30% yield in 90 days. And I said, okay, well, why would he need your money then?
Yeah. That's
If you're making 120% annualized, why would he need your money?
right.
Why wouldn't any bank in the world fund that deal?
Right.
Because we sat down with a banker on Monday who said, hey, man, we do 90%. Sometimes we'll do 100% of the deal.
Yeah.
Right? You got a relationship with me. We're good for, and the deal looks really sweet. Maybe only 10% skin in the game, right?
Well, and he also said, he's like, that's a relationship thing. You got to do a little business
build
with
it.
them. But he basically said, boys, we got a relationship and you guys got a pretty strong balance sheet and it's a good looking deal. We'll fund almost 100% of these things. I'm like, okay.
Right. So then why wouldn't someone fund a 120% annualized return, right?
Right. Right.
And that's the problem, right? It's like, hey, you're only looking at that one number, and you have to realize the higher that number is, the more risk there is.
Yeah. So this goes back to Finance 101, which they don't teach anymore, evidently.
There is there's a lot of people who have a lot of money who never even thought about Finance 101, right?
Yeah. And that is, and everyone says it, the higher rate of return, the higher the risk.
Yep.
Okay. Well, is that risk relative to the rate of return? I could have a crackhead on the corner here of our beautiful building on Hollister, and they'll say, I'll give you a 200% rate of return tomorrow. Yeah. You hand him $100,000 and then you never see him again.
Yeah.
Right? That's the risk.
Yes.
Or you could take a little note deal for 8 or 9% and call it done, right?
Put
From a
in
real
T-bills,
operator.
right?
Yeah.
Get 1%.
Yeah, you get your 1%, right?
1%, so you extreme. And that's unfortunately is the problem when people are trying to compare. We talked about it the other day about our pro formas. It's like, yeah, but we're very conservative, which means we are hedging against risk everywhere we can.
Right.
Right? We analyze risk, my God, maybe too much, right?
It's it's kind of that old adage. I was never a big photographer, but you know, my dad shot a lot, and I got a couple of buddies that are. And there used to be this old saying. It was amateurs worry about lenses, professionals worry about obviously business, right? Are concerned with business, and then the real artists are concerned about lighting. Yeah. And I always thought that's a great, you know, in real estate, it's almost the same thing. It's in investing, it's the same thing, where if you're a competent investor, you're presented with opportunities all the time.
Yes.
What you're really doing is measuring risk. Mm-hmm. That's it.
Most people aren't.
And most people aren't. Yeah. How much time and money do I have to put into this thing? And then what's the relative
Let's see if we
risk?
come up with our own little catch. So amateurs are always looking at interest rates.
Oh, yeah. That's probably a good one.
Right?
Yeah.
Amateurs always and professionals are looking at equity.
Mm-hmm.
Yeah.
Equity and risk.
Yep.
Yeah. How much equity do I have in this deal relative to the amount of risk?
Yeah.
And, you know, I was thinking about this yesterday. I was, I remember where I wasn't working out. I was doing something. And I had this thought that kind of bounced in my head about risk and investing and what makes a true professional, competent investor different than anyone else. Mm-hmm. And it's funny. I don't, you know, the conversation I have with our colleagues is not, you know, is there a market crash? Is there not? Are interest rates too high? Like that very rarely comes up. It really comes down to three core things. And that is marketing and sales, and then operations and construction. Yep. That's really it. Everything else, and then the finance to a certain extent, but you can dovetail that into operations. So other than that, it's not real hard. And I was listening to a podcast last night, and I know I've been meaning to send the guy a text message. His theme of his podcast, and I've been on his podcast a couple of times now. Theme of his podcast is, you know, needlessly complicating one's life, right? And he goes back to the Albert Einstein quote. He said, look, if somebody makes a business process or a business model complicated, it's because they really don't understand it.
Yes.
It's not, people will say this, oh, you got to dumb it down. No, that's not true at all. It's taking a relatively complex process and breaking it down into its component steps where it's really easy to understand. Right. So when you hear somebody drone on and on and on about economics and cycles and all this, and you're like, dude, you just distill this down into 2 bullet points and move on.
Yeah, we get those questions from time to time. It's like, you know, inflation and jobs, and I'm like, well, what does that mean to you?
Yeah, what is that? Explain to me how that's relative.
How is this relative, this deal, right? And so, do we believe that the market's still going up? And if the answer is yes, then when you're going to start analyzing a deal, you're going to look at equity, right? Is rent going to? I think we're probably, like I said 3 months ago, we're about 9 months left. We're about this year. By the end of this year, there's no more 1% rule here.
Yeah, I think we're going to be out of the 1% rule pretty quick.
Yeah, I think we're moving out of that, right? So then, okay, where's the money being made? Mm-hmm. And that's what you have to analyze, right? Because now your NOI is going down.
Yeah.
Right? But is it made on the equity side?
It's we're getting into this really weird world where rents are continuing to increase, but values, we're talking about single family right now.
Hey, you know, we're going to talk about that when we come back from this break here. This is Robert and Jason with the world-renowned Mr. Texas Real Estate. This is the Texas Real Estate Radio Network. Guys, we have Real Estate 101 coming up, and I almost shudder to say the word anymore, 101. It's not beginner. The type of conversations we're having right now on the radio is the stuff that we expand upon in our weekend class. It's a 3-day class, Friday night, Saturday, and Sunday. We want you to come on out, mrtxre101.com, mrtxre101.com. We'll see you here this weekend. I think it's a whopping $97 at this point. We'll see you soon.
Welcome back, Jason Pop, Texas Real Estate Radio Network, joined by special guest Dakota Dog.
He's sniffing out the plants over here.
Oh, we're gonna.
It's a lot of fun.
There's a lot of fun stuff. We have for those who've never been in the studio, we have a jungle in the
atrium
studio.
Built into our studio.
Yeah, the atrium is here. We keep forgetting to put the couch up for guests, but anyways, we'll get all that stuff sorted out pretty soon here.
Soon, yes, very soon.
Cameron, by the way, we got to do B-roll today. Yeah. Do you have time to walk property down the street from here? Mine?
sure.
Yeah. So we need to get some B-roll of that and then start putting some stuff together. But yeah, it's I think in the world of finance, things are changing pretty rapidly. I don't anticipate these rate hikes to I mean, maybe we'll get one more at 50 bips, but a lot of really smart guys that I'm talking to are saying, "Hey, we're thinking recession by Q4 and Q1 23." And I'm like, I'm on board with that. I think we'll be seeing a recession here before the end of the year.
I do not. It really depends if our supply side can get figured out.
It can't. I just read another report.
Really?
China keeps shutting down because of COVID stuff.
Tesla stuff. Yeah, you're right.
I'm sitting here.
That's the problem, right? Is China is the world's Walmart, right?
Yeah. So I'm just case in point. I'm sitting here trying to order home theater stuff for my personal house, and they've got dates to June, almost July on some of these components, and these are not super fancy, super special. These are just some speakers and some amps. Like, this is nothing crazy, right? It's not like I'm ordering, Macintosh stuff or anything like that. So, the supply chain is an absolute disaster, and it's getting worse.
I'll give you a story we talked about yesterday in our PM meeting. Is we're like, it's going to take 6 weeks to 8 weeks to get these windows delivered, and then we got to pull crews off of other jobs around to get them down. So we're probably 10 weeks away. Mm-hmm. I said, okay. Well, what does the law say? And the law says 2 forms of egress.
Oh, okay.
So I was like, what room is that? And I was like, well, there's 1 in the dining room, and there's 3 in the living room. I'm like, draw the little map, show me where they are. I'm like, delete this window, delete this window, delete this window. I was like, do these 2 work? He's like, yes. I was like, delete 1, move the working window into the bedroom.
Done.
We're done.
And then just wait until we've got the until the windows come in, or are you just getting rid of the windows?
Just getting rid of the windows.
Oh, that's funny.
Yeah.
That is funny. Yeah, just get rid of the windows. Problem solved.
Yep. Just take them out. That's it. So we're like, well, what is the natural light looking like? I'm like, listen, we're not worried about natural light in this.
Dude, these are rentals, bro.
Yeah, just we got egress, which is the law and code, and there's still a window over the kitchen sink, and there's still a nice window in the living room, and there's still windows in the bedroom. We're good to go.
Yeah.
I was like, oh, yeah, we can do that. I was like, yes, we can absolutely do that, right? And then, plus we're in we got another problem. We got a windstorm house that's like right on the water, and we're like, order the windows now and tell them it's a retrofit.
There you go.
Let them come back in 9 months from now and change them out because we're not stopping. We're going to use these old windows. We just got to change out the glass panes. Yep.
Yeah, not much else you can do.
Supply side problem.
Supply side.
Really, it's windows at this point. There's a big, big problem with windows.
So there's we're talking right now about, we haven't fleshed it all out yet, where I'll sit there weekly and go through some of the data. If you guys really want to get into this stuff, we'll have a whole little web, little channel. So it'll be for members only. And one of the things I'm really going to start talking about is people talk about inflation. I'm like, well, there's supply side and demand side inflation. And supply side, obviously, we've got 2 things at play here. We've got people getting stimmy checks. That's on the demand side, with nothing else going on all day. And then we've got supply side inflation, where we've got goods that just can't be produced.
Not just people, just the government pumping money into the economy,
Yeah,
right? So there's
yeah.
flush with cash. Cash has got to go somewhere. You got to buy some stuff. There's not enough houses,
Yeah.
not enough cars, not enough widgets, right?
Yeah.
And then on the other side, because everyone didn't go to work for a year and a half, nobody made anything.
That's right.
So, yeah, you're getting double-ended. You got supply side and demand side inflationary problems right now, right?
So now the question is, well, Jason, when does all that stuff subside? And where is the, quote, crash coming in real estate? And I'm like, well, explain to me where we get a whole bunch more houses on the market and a lot less buyers. Because it's really just that simple. You're telling me that there's going to be this boon of new construction, which we talked to any of our developer friends. They're like, no, we can't get money. We can't buy the land fast enough. Can't get the approvals done fast enough. And then the builders are saying, guys, we can't even get enough supply. So running into those issues, then combine that with the demand side of things, like every day more people are moving here.
So big-time builders are going to be very, very tied into the commodities market, right? Because it's all it is. It's rock, it's petroleum, it's wood, right? And that's basically
about
the house,
it, yeah.
right? So they're tied in really, really tight, and they've just said, Nope, too expensive.
Yeah, and they're just going to wait.
We don't want to wait. Even if we could do it, so let some people do onesies and twosies, let some infill happen, but we're not going to roll out there and build out 10,000 homes on the other side of Katy, right? It's not going to happen.
They have to, whatever their price per square foot is, they have to sell for double.
Yes.
That's kind of the rule.
Yep.
So if we're at $125 a square foot, if they're not selling at $250, they don't even buy. It's like, guys, we're just going to wait.
Do it. Yeah, we're going to wait.
Just wait.
Yep.
Buy the land and wait.
So they're not motivated to do anything right now. I posted an article on my Facebook thread yesterday. Home builders in February and March were like, we're not building anything.
Yeah, we're just going to sit.
They're just going to sit. So there's no crash coming on the. It's because there's a bunch of people. There's a whole bunch of empty houses, right? It's like you keep saying, the crash is on the supply side. There's just not enough houses, which is driving the market the other way.
Right.
Right, but it is basically an inflationary or economic crash in that there's not enough houses to live in.
And this is not something that's happened in the last 6 months. This has been going on for almost 4 years now.
Yeah, so I was looking this morning at just some basic census data. There's, depending on what number we're using, there's 11 million housing units in Texas, which is about right. So it's 3 people per
Yeah, that's about
unit, right?
Yeah.
Mom, dad, and a kid, right?
Yeah.
There's 3 per there. And then in Houston, there's about a little over 1 million housing units.
Okay.
And makes sense. It's about 3-4 million people here, so it's a little bit more congested.
That's not the
urban.
entire MSA. That's just kind of like the Houston,
Yep,
Harris County
Houston,
area.
yep,
Okay.
And then I looked at dog's killing me.
He's having a
eating
field
the
day in
mulch,
here.
yeah.
He's eating the mulch. He's playing in the garden over here.
And then I looked at it and I was like, okay, well that makes sense. There's only about 3.74, less than 4% of the market flips here in Texas. I get it, and I'm just like, boy, there's just still not enough houses. And then when we looked at housing starts were down again in the Houston area. So again, I don't see that crash. In fact, the fact that we're sitting on 400, 500 doors, we're giggling every single morning when we wake up, right? This is all good for us. Hey, this is Robert and Jason with the world-renowned Mr. Texas Real Estate. Check out our website, mrtxre.com. MR is in Mr. TX is in Texas. RE is in realestate.com. Go check out our event page. Got a lot of stuff going on. Hey, we'll be back.
Welcome back. Jason Bible, Robert Orfino, Dakota Dog, recycling the mulch as we speak.
Absolutely recycling the mulch.
So I just pulled up the HAR report real quick. We have active listings negative 2% year over year, meaning we can't put enough houses on the market. And then if we look at total property sales are up 4% and pending home sales are up 4%.
Now he's rolling in the chewed mulch.
Yeah, that's funny.
Dog.
So it's getting to the point now where we just don't have enough properties for sale in the marketplace. So what are you going to do? I mean, if everyone keeps, I'm just going to wait till the crash. Like, there's crash to what?
No.
So
we're having our mastermind coming up.
Okay.
And Friday we're going to do properties. Saturday we're going to do money. And then Sunday morning, a little bonus session, we're going to do personal finances. And the answer is you're either going to sit on this stuff, right? Or you got to start planning some exits, refis, and rolls, right? Like now is the time. Let's put some timers on these. Let's figure out the numbers. And so we're looking at all this stuff, and it's like, what are you going to do? It's like, I'm not waiting for a crash. And I don't want to say I'm going to time the market, but hey, I've got another 2 years around here. There's a nice little run where we're going to I'll start putting my stuff out for refi or my stuff out for sale, take that money and do the free and clear thing that we've been talking about for 3 years. This is a time for everyone who's already have properties or wants to get in the game. This next 5 years is the time to get incredibly wealthy.
Yeah.
The market is telling you, buy this asset.
Yeah.
It's going up 7% so far this year. The market is screaming, buy this asset, right?
So my prediction from beginning of the year was we're going to see 13% a year appreciation. We're already at 7.
We're already halfway through. We're going to get to 20 again.
We're going to hit 20 again this year. And everybody thought I was crazy when I made that prediction in the room. And I said, guys, I'm telling you, it is coming.
Straight up accumulative, if we hit 20, that'll be 52% appreciation in 3 years.
Yeah.
Now, I can't do the quick math to add on and add on and add on, but yeah, it's just straight accumulative. We're at 52. It's probably really like 60.
Yeah.
That's insane.
It's absolutely insane.
And in 2 more years, so you have a 5-year run where you're going to double the price of your real estate.
And if you were only in for 20%, your rate of return is
Oh my
ridiculous.
God, it's crazy. Yeah.
So,
Beauty of leverage, right?
right. So again, to go back to, what should you invest in? It's up to you. It ain't Bitcoin. It's not. It's like
That's not happening in Bitcoin. No, not at all.
No.
No.
They're stuck.
So if you believe there's a 7-year run like we do here, and you could refi in year 3 and pull your initial investment out, you still might be able to sell 2 to pay off 3, right? You still might be able to do the whole thing with more cash. It is a phenomenal thing, and this is kind of what we're talking about on Sunday. It's like we've got to figure out ways to go get more properties.
Yeah.
So some of you have been in the game for 2 years. You already will have 50% appreciation.
Yes.
It's time to do a refi, take some money out, and go buy some more properties. Right? Now, I don't recommend you doing this forever and ever. You have a plan, have a 5 or 7 year or 3 year plan so that you can get out. At the end of the day, I am a Dave Ramsey guy. I want stuff free and clear. I want my understanding where my income is going, where my money goes, right? Where it's coming from and where it's going. But I got a little 10 years here in my life where I've had to go out and leverage and get all this stuff going so that the last 30 years of my life can be fantastic. And that's the type of stuff we're going to cover this weekend at Real Estate 101. That's a nice little transition.
Yeah,
isn't
good
it?
segue.
That's nice. Yeah, it's good. So we are, we're going to do some Real Estate 101, MRTXRE101.com. How much time we have left?
You still got about 5 minutes.
Well, I'm just watching a dog. So my dog is a black-mouthed cur.
Is that what that? Okay.
He's a black-mouthed cur. It's original from... They think the origins are somewhere between Florida and Texas. It's a Texas dog. The way I like to call it is it's a skinnier Labrador.
Oh, okay.
That's the best way. It's got all the same traits. Extremely loyal, work dog. Like he wants to scout. He wants to run around. He wants to do all that stuff. Really, really smart. Like as smart as the lab. Just very, very clever dog. Picks up tricks one training session. Just like one training session, we can get him to do that. Now it's just a matter of time. But he needs to be active. So I have not introduced him to the pool yet.
Oh, yeah, the pool's going to be fun.
Keep sniffing. I'm like, no. And then finally it's going to be yes, and let him
play around.
Let him go in the pool. Yeah. So, but we have a big backyard. He's loving life. He loves just laying in the grass.
Is he laying in the mulch?
Chewing on stuff. Yeah. That's what he does. He doesn't eat it. It just all comes out of his mouth, right?
Yeah.
But yeah, I adopted him. I highly recommend you guys looking for rescues. This is a good dog. I got him pretty much as a puppy. He's 5 months, going on 6 months.
Okay.
He's 40 pounds today.
He's 40 pounds. He doesn't look 40 pounds.
He's 40 pounds. He was 39.7 pounds.
He's supposed to get to what?
60.
60?
Yeah.
I don't know. It might be bigger than that.
Maybe. But he's not aggressive. He's super happy dog.
Yeah.
He's great around the office. He goes and says hello. Flirts with all the ladies in the office.
Yeah.
Right? Comes around. And
whenever he wanders in, he goes into everybody's office.
Yeah,
Check in.
Check in. Hey, I'm here. Look at me. Give me
What's
some
going on,
attention.
guys? Yeah, need some pets.
Yep. So, good dog, and that's I've talked about it many times on the air here about, we are a dog house, right? We a dog now. My dog died almost 2 years ago. Boy, it absolutely destroyed me emotionally. I couldn't believe how attached I was to that damn dog, right?
Yeah.
Just being sad, driving nowhere, right, and that type of things. The good thing about him is his average life is close to 15 years.
Oh, wow.
He could be as old as 18-year-old dog. So I'm like, fine. Remember my goal?
Yeah.
My goal is so that I die and pass out on the floor, and then my dog eats my face, right?
Yeah.
And then so I don't have to deal with another dog life.
That happens a lot, folks.
That's what happens. Old people, they die. And the
No, I
dogs,
thought you were going to start smoking at 70.
Oh, yeah, maybe. I might have to have a second dog after him.
Yeah, start smoking it. I thought that was the life plan.
I can't wait for him smoking Newports again. God, I can't wait. I want one right now. So bad I want to open up a pack of Newports. Anyway, but we quit smoking. We get all the health. We get all the life insurance policies. Then come 70 years old, we can start smoking again.
Well,
All statistics,
speaking
right?
of life insurance stuff, I got a meeting with Pat tonight, and we're doing the get together. We do an investor happy hour every Wednesday. So anyway, we're getting together tonight, and I'm like, all right, man, let's get the plan all sorted out here. Let's see how healthy we can get in 3 months, and then I want to go in for my Insurance
here.
physical. Yeah.
I do core every day now until I actually physically hurt.
Okay.
That is my plan. And it takes me about 15, 20 minutes, and then that's it. So
Yeah.
I just want to be able to start swinging the golf club in like 60 days.
Ah, gotcha.
Yeah.
They do these. My guy had me doing these twist exercises.
Yeah,
You know, because
I'm
you
not
got
there
twists
yet.
and all that.
Yeah,
Okay.
not there yet. Yeah. All I'm doing is crunches and kettlebell.
Yeah. I was always, you watch a swing like Tiger, and of course his swings change a million times over the years, and a couple other guys, and I've always liked the taller, leaner European guys because they just have that beautiful swoop,
arc,
right?
yeah.
Big arc, and you get that good extension coming off the back. I've always loved that. Like, it just looks great.
I'm the short, fat Italian guy. I take 3/4 swings most of the time. Just whack it.
We had a guy we used to play with. His back and knees were so bad that he literally was like half swinging everything, and it was almost like he had to punch the ball out, right? He couldn't really get in that full backswing.
Yeah.
He would just slap that thing out there.
That's
He was
right,
he was really good, but he's like, he just told me one day, he's like, Bible, man, my back, my shoulder, my knee, they're all so shot. He can't play more than 36 in a day. He's like, it just kills him.
Well, I learned very early on from a golf coach. He basically said, the head does everything. He said, just let the club head do what it's supposed to do.
Yeah.
Right? And you can take a half swing, a 3/4 swing, or a big full pro swing. You're all going to be within, 30% of each other. So
yeah.
just have some fun.
Yeah.
Guys, this is Robert and Jason with the world-renowned Mr. Texas Real Estate. We have Texas Real Estate 101 this weekend, Friday, Saturday, and Sunday. Make sure you come on out. Go to mrtxre101.com, mrtxre101.com. Thanks. Hey, everyone. Welcome back. This is Jason Bible and Robert Orfino here. We're with the world-renowned Mr. Texas Real Estate. And this is the Texas Real Estate Radio Network.
With special guest Dakota Dog
Dakota Dog is in the studio.
in the studio. First time in the studio.
He's still a little clumsy as a puppy, right? He's still banging
yeah.
into stuff. And
I just thought it was crazy when he comes running into my office and slides underneath the coffee table
Yeah, that was pretty cool.
to go get Kate. It was pretty funny. Anyway, so I think we're going to see a little turbulence here in the stock market. It's getting to the point where I don't know if you guys saw what happened with Netflix yesterday.
I didn't
So
see it.
big announcement, Netflix. They lost a ton of subscribers.
Oh, yeah. They're going to a pay advertising model, right?
Well, so here's what
good.
happened. They went and they got smoked on Wall Street. In fact, 31 out of
Wow,
34.
that's part of the FANG group, right? That's
Yeah,
a big one.
31 out of 34 analysts said the day before they were a buy. Everybody adjusted their price targets yesterday to half of what they did the day before. So, I mean, it makes sense. No one's at home watching TV anymore, I guess. I don't know
Yeah,
what
right.
the deal
No,
is,
it's not. We're not in shutdown, not in lockdown anymore. Yep.
So, I'm kind of curious where Zoom is at. I haven't looked at Zoom in forever, but yeah, we're getting to the point where things are kind of starting to get back to normal, even though we've got a lot of stuff going on in China right now.
A smart hedge fund guy is always going to balance their portfolio, right? There's always that 90 days of transition, right? So I'd say by 2023 we're going to be back to John Deere, right, and getting into manufacturing again because we finally figured the supply side out, right?
You'd hope.
Well, yeah, right. Well, you hope, yeah.
I think China's learning a really interesting lesson here, where it can just arbitrarily shut some cities down from time to time, and we see the prices go through the roof, and they don't have to be as competitive on the manufacturing side as they used to. So last I heard from a couple of my commercial real estate buddies, they were saying industrial's on fire right now because people want to relocate at least some of their more sensitive components here in the United States. But that's like a 5-year play. It doesn't happen overnight.
Yeah, the pharmaceuticals are in the middle of all that. Yeah, absolutely, right. And then it just becomes a 15-minute news blurb on CNBC, and that changes the direction of the stock, right?
Yeah.
7 years of work for 15 minutes
Yeah.
of fame, and then you get your switch, right?
So I think there's going to be a lot of interesting things that occur in the marketplace. Now, what does that have to do with real estate? In Texas, probably not a whole lot.
Not much. No.
Where healthcare and oil, and I read a report day before yesterday, they're predicting 185 a barrel by the end of the year because of the Ukraine situation. And I'm like, well, the ECB, well, I shouldn't say the ECB, the European basically said we're not buying any Russian oil. So I'm like, okay, so that's just going to continue to press prices upward. So it's going to be interesting to see how this whole thing rolls out by the end of the year. A lot of uncertainty in the marketplace. But what's that do for real estate?
We're still good.
Yeah, I mean, I keep buying as much of this stuff down here as possible. I'm having some really interesting...
We don't see any negative indicators,
No, I don't.
right? So then the answer is buy more real estate.
Right. Or watch the news and tell you not to do anything. Sit on your hands.
Right, everyone's in a panic, so go right ahead. That's great. Yeah, yes, everyone listening, go do that while I keep buying more.
Yeah, you guys all need to get out of real estate. Get out now.
I just picked up another small apartment at $50,000 a door.
Yeah.
Yep. It's going to be rated at somewhere around $200 a door when I'm done with it.
Yep. I don't know, man. I don't think this real estate thing's going to work out.
I know. Yep. Who starts the radio show on 1st of July?
Oh,
April
yeah,
1st.
we did April 1st. That's right. Was it 2 years ago or 3? 29.
3.
3 years ago. It's 2019.
Yep. 19, 20, 21.
Yeah, year 3. Yeah, we started our radio show, our first broadcast, April 1st,
April 1st. Yep.
2019. Mr. Texas Real Estate was started on day after Valentine's Day, I think, February 15th.
Yep. Right around there. Yep.
So
our birthdays.
a lot of you guys see this. It's kind of, this has all been like in less than 3 years, right?
Yep.
So we're moving into year 3. So
You moving into year 4.
yeah, oh, that's true. Yeah.
Yep.
So you can wait, or I keep reading. I'm in all these groups on Facebook, and it's like real estate crash, real estate crash, real estate crash. And I'm like, if you really believe that, then sell all of your assets,
Yeah,
go to
get
cash,
out.
and
Yep.
wait.
Yep.
But then here's the question I always ask: okay, you're going to do that. How long do you wait? How long do you wait to know that you're wrong?
Yeah. So I don't think that's ever a real conversation,
Yeah.
right? I'm getting bored of those conversations now. I'm getting
Because it's
really
just so
bored. It's just
ridiculous.
like, guy, what are you talking about, right? I have someone in the office last night, right? And he's in on that whole thing, so
Yeah.
we're good. But he's like, I don't know, So we're just about done. We can announce that we bought a gazillion units in Freeport.
Okay.
We're done buying there.
Okay.
We're just about done buying.
Just
there.
about done. Yeah.
Yeah, it'll be a couple loose ones. So everyone should go look at Freeport and help drive up my values there, right?
Yeah, it's I got a lot of really hearty thanks for doubling the values in Surfside.
Surfside, yeah.
So guess what's going to happen in
Oh,
Freeport?
did you see our Surfside deal went out 3 days on market, full offer, all cash, closed in
Yeah, I saw that.
24 days,
I think we're in that for $250. I think it's going to be pending at
Yeah.
$370.
370. So nice little deal. Yeah,
Not bad.
And we're in at 250 because of $50,000 of holding, rehab, and
Yeah.
furniture.
Yeah,
We bought it at 200.
yeah. So not bad
No, not bad at all.
at all.
And that one is we're partnering with our lawyers, so I always like to get the lawyers the hell out of our stuff.
Yeah, it's like,
as
all right,
quickly as
well, this was
possible.
fun. So
Yeah, just get out. Thank you very much, but
Here's your money.
Yeah, we're good. We don't, lawyers and architects, really hard
Yeah.
people to do business with.
how many square feet is that one? Is it 1,000?
It's 1,100. Yep.
So if that one's 370,
Yeah.
with 1,100 square feet, so we got to be at. I bet that one's gonna. I need to get that started. By the way, I bet that one's gonna appraise for 500. That's on the water.
Yep, for sure. Yep.
Which is crazy.
One more week. Let's get the other thing wrapped up.
Okay. So it's it is absolutely insane down there. And people keep asking like, "Oh, there's no way. It's not going to get any higher." And I'm like, "Why wouldn't it? It's done that since the dawn of time." You guys do realize real estate has not gone down in value in Texas ever.
Right.
Like
They're waiting for some sort of 1 in 1,000 year catastrophe, right?
I guess they're waiting for nuclear winter. That's the only thing that like
See, they're not waiting.
well, it's just excuses.
They were never in it to begin with.
Oh, that's true.
That's the reality I'm coming. When I hear about, well, I'm waiting. You're not waiting. You're bored, and for some reason you got in this room, so you got to figure out an excuse to say something to me.
Yeah. Oh.
That's what it really comes down to.
Yeah.
You're bored, and you're in this room for some reason. You don't like staying at home alone. You don't like staying home with the wife. You're getting out, trying to think like you're doing something, and then you're going to come up to me with every excuse in the book, which tells me you were never in it to begin with.
Yeah. Yeah.
Right? I don't want to hear, oh, I bought back in 97. That's great.
Yeah.
What have you done in the last 25 years?
You know what it reminds me of is Christmas Vacation, when Clark is looking out the back window and imagining the pool.
Yeah.
I think that's what most guys, when they show up to real estate events, and even gals too, it's like they're envisioning the pool with the Lamborghini and the big house and all that. And I'm like, okay, well, what are you going to do and they're waiting for that magical check to come from their boss, Scrooge
Magic,
McDuck,
Yeah.
so they can then live this fantasy lifestyle. And I will tell you this, the life doesn't change. The cars are nicer and all that, but life really doesn't change that much. You're not like that much happier. I mean, it's
Right. We're going to work on that Sunday morning.
Yeah.
Our masterminds. Like, you guys, now we're getting wealthy. How are we getting, stay wealthy, protect our wealth, and be happier, right?
Yeah.
Hey, this is Robert and Jason, world-renowned Texas real estate. Make sure you check out our Real Estate 101 this weekend. Go to mrtxre101.com. MR is in Mr. TX is in Texas. RE is in real estate. 101.com. It's a whopping $97. It's a 2.5-day event. We will absolutely blow your mind. Hey, thanks for listening to us tonight. We have a short break coming back, and then we're done.